There are four possible scenarios for the coronavirus, the economy, and your money. Scenario 1, the coronavirus is dead by summertime and the economy and life goes back to normal. Scenario 2, the virus is slowed down drastically by mid-year, a vaccine is around the corner, and businesses can recover from lost profits, so things will be okay financially. Scenario 3, the spread of coronavirus is slowed down by mid-year, a vaccine or treatment is still far away, businesses can't completely recover from lost profits, and now you're starting to see layoffs. And scenario 4, the virus does not slow down by mid-year. A third of the world will get the disease, and now businesses have to shut their doors and people will be left sick and jobless. What's up everybody, I am Jasprit Singh and welcome to the Minority Mindset. In December of 2019, China picked up the phone and they called up the World Health Organization or WHO and told them that they were getting this weird case of pneumonia, which was soon discovered to be this new case of coronavirus. Psh, big deal. People get sick all the time. But this coronavirus, not to be confused with the Corona beer, which was apparently a trending search on Google for a number of weeks, was different. We have entire countries like Italy under quarantine, we have major schools like Harvard canceling all their classes, and we have the stock market tanking so hard that it hit the circuit breaker and stock market trading had to be halted twice. First on Monday, March 9th, and then again yesterday on March 12th, Thursday. From February 12th to March 11th, we went from breaking record highs in the stock market to entering bear market territory. That's the fastest 20% drop we've ever seen in the stock market in our history. I'm not a doctor or Elon Musk, so I can't tell you how serious this is or if this panic is dumb. His words, not mine. But I am an attorney and I am an investor and I need to go over the 7 things you need to understand about your money during this corona crash. And in the end of this video, I'm going to be talking about what you should be doing with your money. This way you can come out of this crisis winning financially. So wash your hands and then smash that thumbs up button and subscribe to the Minority Mindset YouTube channel. That way you don't miss a new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube's not going to let you know when the new videos are released. First, just so we're all on the same page, what the heck is going on? The coronavirus isn't new. It's been around for years and years and years. What's new is this particular strain of coronavirus called COVID-19. This video isn't recorded live. I recorded this video yesterday, March 12th, midday, and at the time of me recording this video, there were just about 130,000 confirmed cases of coronavirus. That's not a huge number considering the fact that 34 million people are expected to get the flu, out of which 20,000 of them will die this year, according to the CDC. But on a percentage basis, the coronavirus is a whole lot deadlier. According to my numbers, 3.5% of people died who got the coronavirus, while only half of 0.1% of people died who got the flu. So according to my numbers, the coronavirus is 70 times more lethal than the flu, while according to health experts, it's 10 times more deadly. So I don't know. Regardless, the concerns are real because Congress's in-house doctor told Capitol Hill on March 11th that he expects that 70 to 150 million Americans will get the disease. That's 1 out of 3 people in the US. So this is a serious issue and you need to be taking whatever precautions you can. Wash your hands, don't travel. Who knows, you might save a grandma's life. But that's all I can say regarding the health issues. So let me switch gears and talk about 2, the stock market crash. Look, the coronavirus didn't cause a market sell-off. It was a catalyst. Stocks had been rallying for over a decade and were likely overpriced. I mean, we have unsustainable amounts of corporate debt, we have record high amounts of consumer debt, and we had crazy high valuations for companies. If you've been subscribed to our channel, you know that this is nothing new. The interesting thing is that right now, we don't know the extent of the issue fundamentally. I mean, the last jobs report we got from February was a blowout. We added more jobs than expected, unemployment was at 3.5%, which is extremely low, and businesses were showing record profits. That means the stock market crash that you've been seeing for the last couple weeks has been emotionally triggered because investors and people are, well, worried. I was in Miami last weekend and there were posters for this huge music festival called Ultra, which expects like 200,000 people to attend, with signs saying that it was canceled because of the coronavirus. This is our first quarter dealing with coronavirus, so we won't actually have a real clue of how bad it is for our economy until at least April, May, and June. Speaking of how bad it can be, instead of guessing about it, let's go over the 4 actual possibilities that there are, starting with the best case scenario. The best case scenario is by this summertime, the virus is completely contained, a vaccine or treatment is around the corner, and businesses return to normal because they weren't super badly affected. Scenario 2, the virus is slowed down significantly by summertime and businesses lose 3 to 4 months worth of profits, but most of them can go on like normal with just a little bump on their financial statements. Scenario 3, the virus is slowed down a little bit by summertime but is still growing quickly, and now businesses are losing 6 to 9 months worth of profits because there are still major quarantines out there, and now businesses can't make up from all this loss, and so you're seeing major layoffs and some bankruptcies. And scenario 4, the worst case scenario, is by summertime or end of this year, the virus is still growing as quickly as it is now, a vaccine or treatment is still far away, and now businesses lose a year or more worth of profits, and now you're gonna see major businesses shut their doors and go into bankruptcy. You're gonna see major bailouts like you saw in 2008. You're gonna see major layoffs, and many people are gonna be left sick and jobless. Where will we be within these 4 scenarios? Well, it depends on how well the physical and financial containment effort works, which I'll be talking about in just a minute. But before I get there, I want to talk about 3, managing your emotions. Panicking won't help you physically to avoid getting the disease, and it won't help you financially by selling everything and running away. You're already stocking up on toilet paper, hand sanitizer, and food, but don't forget to stock up on your financial education too. You need to take care of your finances more than ever now, because when all this is said and done, you want to come out of this a financial winner instead of one of those people who are going to come out of this with a 50 to 70% cut in the net worth in just a matter of weeks or months. If you haven't already, start managing your money better, save some money, and get ready to invest heavily. Do we know how long it's going to take to recover? No, it could be weeks, it could be months, it could be years. But history has showed us that we will recover. And if you're looking for more resources, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get this ebook and read our financial education emails by clicking the link up here or by clicking the link in the description below. 4th, let's talk reality about what's being done. If this virus can be contained physically, then there's no problem. You're healthy and people and jobs and businesses can go back to normal. If the virus cannot be contained, then more people will get sick and die, people will be scared to leave their homes, people will lose their jobs, and businesses will be forced to shut their doors. But here's what's being done. On March 8th, Italy took drastic measures by quarantining 16 million people, a third of their country. Then on March 9th, the very next day, Italy decided to take it one step further by quarantining the entire country. New York announced that they're creating a 1-mile containment zone to limit gatherings. This way they can stop the spread. California banned gatherings over 1,000 people, and Washington State banned gatherings over 250 people. And now we're seeing schools, workplaces, sporting games, flights, and cruises being canceled. Obviously, some measures might be extreme, and others might not be extreme enough, but if we can contain the virus from spreading, then you will stop people from getting sick and you will stop the economy from going into a major recession. 5th, what about financial containment? I don't have any insider information. I have to infer from what's happening around me, and I have to assume that businesses are already hurting because of what the government and the Federal Reserve are doing. On March 3rd, the Federal Reserve came out with an emergency rate cut, which is the first time we saw that since 2008, to cut interest rates by 0.5%, which is the first time we saw a rate cut that big since 2008. And this is intended to make borrowing easier for businesses, so it's easier for them to stay in business. Now, people and investors are pretty much all expecting interest rates to be cut all the way down to 0, which is what we saw happen during the 2008 crash. That's really scary because right now we're supposedly in a very strong economy, which means if we do happen to go into a big recession and interest rates need to be cut more to stimulate the economy, we will be seeing negative interest rates in the United States, which is something we have never seen in the history of our economy. I'll save what negative interest rates mean for a different video, but that's not all that's being done. President Donald Trump is talking about creating an emergency stimulus package for businesses to help businesses stay in business and keep employees employed. At the time when we're recording this video, we don't know what the extent of this will be or what it exactly will entail, but I'll be talking more about it as we find out more details. Now that you know what's being done to contain the virus physically and financially, let's talk about 6, the order of operations. Restaurants, travel businesses, airlines, cruise lines, and businesses that require major foot traffic like sporting businesses are going to be the first to feel the hit. No one wants to risk getting stuck on a cruise ship full of sick people. Flights are being grounded, which means less people are traveling, which means less people are staying in hotels, which means less people are eating at restaurants. And now the NBA suspended their season and the NHL is on the hot seat. The second layer of people are companies like Nike and Apple, which have deep ties to China because, for one, they can't manufacture anything because factories are closed in China, and two, people are not wanting to buy things that are made in China right now. Not to mention the fact that malls are completely empty. The third layer will be the financial industry like banks, because if businesses stop making money, then they're not going to have money to pay back the loans. And people are not going to want to take out a loan to go buy a new home. Plus, if the virus can't be contained and it gets to this point, then people will be losing their jobs and they won't have money to make their loan payments. And fourth, you have the economy as a whole, which we've already started to see. Nobody wants to do business with China or Italy right now. People don't want to go and see their dentist because they might have to sit in a waiting room where one person might be sick. And people don't even want to get their oil changed anymore. I was talking to a buddy of mine who owns a car shop, and he was telling me about how his sales have dropped drastically over the last 2 weeks, and how people are coming in and leaving their cars on his lot saying, hey man, I don't want to drive this car right now, so can I just leave it here because I don't know what's going to happen in the economy. Now for the $1 million question, number 7. What do you do with your money right now? We have just seen panic and speculation in the stock market so far. We don't know how bad or not bad it will be for the economy yet. What we do know is that if history is an indicator for the future, some people are going to come out of this very rich, because over the long run, things tend to recover. Like Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. Right now, people are scared, but it looks like things are going to get worse before they get better. So here's the dilemma. You don't want to get caught trying to panic sell, and you don't want to get caught trying to catch a falling knife, but you also don't want to miss a historic buying opportunity. Now, before I go any further, let me give you a disclaimer. I'm an attorney, but I'm not your attorney, and I'm not your financial advisor. Investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so always do your own due diligence. Markets are emotional. When things go wrong, they will show up even harder on the stock market, which means when things are bad, you have the opportunity to buy investments on sale, and I like to do a type of drip buying. I have a list of companies that I want to invest in and own that I think are strong and that I think have a great potential, but they are getting smacked by the virus. When these companies get pounded, I buy, but I don't buy all at once. I call it drip buying because it's gradual. Every time a company or fund that I want to invest in drops another 5 to 10%, I buy more. That way I'm not stuck trying to catch a falling knife, but I'm also not missing out on the opportunity to buy things as they come down, because you can't perfectly time the market. Again, if you want to learn more about investing, I have our ebook in the description below that you can download. And now I want to hear your thoughts. What do you think about this whole coronavirus thing? Is it overblown, or are we just getting started? Let me know your thoughts in the comments below. I'm really interested to hear what you think. Thank you for watching. If you enjoyed this video, share it with one friend, and I have more videos coming out on companies and investments that you should be considering investing in. And if you want to learn more about what happens if we enter a global depression, I already made a video on it, and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.